What's up everybody? Tom here with another video. In today's video, we'll be discussing everything to do with the markets for the end of the week. We'll also be talking about technical analysis levels for the S&P 500, NASDAQ, Bitcoin, Tesla, gold, dollar index, and more. Of course, we have the jobs numbers coming out of the US, the most important bit of information generally in the month. The markets are clearly awaiting this and they're coiling, ready for what looks like it could be an explosion. Stay tuned to find out more. Alright everyone, well here begins our recap of the markets for the 1st of July 2021, and straight away you'll see it was kind of like a sea of mixture. It wasn't just green, it was a little bit of red. Semiconductors were down on the day, and that was pretty much mainly the story. I mean, a few of the tech stocks also weren't doing so well, and the hyper stocks were coming down. What was moving up was the IWM, so the Russell 2000 was starting to make some inroads. The NASDAQ ended up being as flat as it gets, 0.01%. Does it get any closer than that? I don't think so. Dow Jones, S&P 500, both up slightly as we saw some rotation into, I guess, the older sectors. Things like energy was doing very well. Great breakout there in energy. We also had the utilities index coming through, which is unusual. That's usually a defensive sector. And we even had water sector. You can see here, PHO. This is something that we've been looking at in the live streams. That broke out, and our two favorites for the month of June continue to do well, which is the biotech and healthcare sectors. Let's now scroll through the markets and get into the technical analysis. And first up, I want to mention dollar index, because dollar index actually broke out yesterday. You'll notice here the closure was above 92.40. It is unusual to see this occur, but we did actually have it occur very, very similarly last month when we had non-farm payrolls. This is obviously expecting that potentially we may see talking about tapering maybe a little bit earlier. Of course, if the dollar index is rising, what's happening here? Well, they're saying, hey, we believe that there's a chance that maybe we won't be printing as much money in the future on the dollar. Maybe on top of that, we might not be, rising rates as slowly as people have expected. These are the types of things that get packed into the dollar. Now, I don't want to speculate on that too much. We're only looking here at the price action, but this closure is a pretty big deal. It opens up a few new trades now. It opens up the trade with the pullback back to the 92.40 through the non-farm payrolls, and then taking the lightning bolt up to the next resistance. And of course, it opens up the all-important weekly closure. Will we see the weekly closure above the 50 exponential? Because when this occurs, it really changes the game on what we've been looking at from a perspective of dollar index weakness. It's been weak now all since we started this whole pandemic situation. Obviously, you go over here to March area, you'll see it's just been constantly declining due to the massive print load that's been on the dollar index. We always need to remember, though, they've been printing all over the world. So in comparison to other sections in the world, people still love the US dollar. It is still a hedging asset against uncertainty, and people treat it that way. Let's have a look now at gold. Now, you would think, hey, dollar index going really strong. Doesn't that mean gold should be getting belted? Well, you would think it would be, but at this stage, we are stuck in the middle of the range. Now, we talked about at great length yesterday about the closure out here and how it was most likely going to be a false breakout. And unfortunately, we started to see the signs there, and I think that's a great lesson. So go check out yesterday's video if you want to understand better about how to avoid the false breakout and make the right decisions in these positions. Now, we're sitting in the middle of the zone. The middle of the zone does not help us. If you were looking at this chart, you would think, oh, there's more chance of it going bullish back up into these highs in 1800 at this point, but it would be almost a coin flip at best. So it's very tough to pick a choice here on the gold and silver markets. And you know what you've got to do sometimes here? I said it in the stream last night. You've got to just sit back, relax, and wait for the next good opportunity. If you're a scalper and you're scalping small moves, of course, you can continue to potentially do that, though ahead of non-farm payrolls, you might get stuck and that might not be good. But if you're a swing trader or even a longer base trader, it's very difficult to trade in that kind of environment. Speaking of big breakouts, yesterday we did see the big breakout here on oil, and it was pretty damn nice. You take the distance here of the channel, you extrapolate that out. There's no wonder why it hit $76. And I want to say congratulations to everybody that's been following oil on the channel. Some people call it Texas tea, it seems to be in the comments. I call it black gold as well. Look, it's hit 76. This was our long-term target. about $10 ago. And of course, all the way back to when we started this channel last year, we were talking about this level and talking about how it was hopefully going to become a reality. It certainly did. It's a momentous occasion, and it had a really great breakout on yesterday. You'll notice the 1 hour broke up. It had never closed above this zone before that, pulled back almost immediately right to here, and then found buying pressure all the way into the 76 take. If you got it, congratulations. And it's a great sign and a great movement there in the charts. However, energy sector lovers, you know you're at a critical resistance, and you also know we've moved up here at an extreme speed. Remember, if we're that far away from a 20 exponential moving average, we're definitely a little bit overcooked. Now, could it go through and blast to $80 or $82? Anything's possible, but that's most likely going to be in what we call the excess phase. So I would expect now a consolidation around this zone, and not necessarily as much strength as a lot of people may be feeling in, let's say, the mainstream media, etc. This is the time where you bunker down and you trade very small movements, and you're very, very careful with the next move until we see further information. Let's move over here to Tesla. Now, what's going on in the Tesla markets? I can say this, it's stuck and it is in a range. And other than that, we are not getting clearly that much information. We've got $700 as our clear, that's when the bulls get back in control. And we've got this level down here, this 670, 671. If we get under that, we may fill the gap. Let's have a talk about this gap for a second. Go to the daily. You'll notice that, of course, there was that huge gap on the bullish movement here just a few days ago. And this is what you would call coiling inside of a market. Now, of course, if coiling goes to the upside, that's amazing, because I could see participation coming back in. And this is where a lot of traders will start to pile into Tesla. At least that's what I'm looking at here on the charts. If it closed underneath, it's very likely to fill the gap and potentially come back to the 20 and the 50 exponential moving average, which, by the way, on the daily just crossed. A fairly decent bullish sign here, or at least another reason that people are going to start feeling better about this. If you check out NIO as well, which is obviously the Chinese kind of Tesla, they've been doing amazingly well. So this stock is behind. It is behind a lot. And $700 will be the key level for us to be looking at. Let's move over to Bitcoin. And it continues to struggle. It continues to find problems. We talked yesterday about this head and shoulders potential. So we obviously have the left, we've got the head, and we've got the right shoulder. We've seen it come up a few times now and test this level of the neckline, and it keeps failing. That's around 34,000. Look, we're stuck in a zone. For the bulls, you've got to get repair going on. You've got to get it above this zone here, and then above here. I wouldn't say that it's acting incredibly technically at this stage in terms of cryptocurrency. We saw a nice bullish close out. That actually should have moved to 38,000. It struggled at 36.6. That's a pretty small movement considering what we should have expected from it. And when we actually extrapolate this out and think about where it goes to, it kind of pushes it back down to around that 31,400. So if this head and shoulders plays out, that's where we're going. And I'm looking for it to break above 34 until I see some more bullish strength. And I want it actually above 35.2 to really show us that the power is there. Let's move over now to the NASDAQ. So the NASDAQ has found a few key levels. And one of those levels is the support here at 14,484. Now, why that level? Who really knows? The main thing that's happened here is we have a support, we have an area where it's been bought off now, and we also have a little bit of resistance where it's sold off. So if you notice up here, we've got a closure up here. This is a 2-hour chart, so it's fairly significant. Now, this is on the US 100, so this is the futures, but it could give us a bit of an inkling onto levels that we want to be looking at ahead of non-farm payrolls. If we start scrolling around here on the futures, what is this really telling us about the chart? Well, firstly, the 4-hour 20 has actually been held between. We know there's no breach of that yet. We also know that it's trapped in this little bit of a range. And if we go over to the daily, what do we also see in the market? The market's telling us we've got to be careful here. It has no idea what it wants to do. Long-legged doji. Indecision candle, probably one of the ones I talk about the most on this channel. And it's right there ahead of the non-farm payrolls. So this will be the critical zone. We've got it kind of trapped in the area for day traders after the event. So we'll see how, if it plays out to the distance down or the distance up. We don't know yet. And of course, we'll be running this live 1.5 hours early before New York session. And remember, 1 hour before the New York session, we will have the result coming out. Let's have a quick look at QQQ. This is the longer term ascending channel that we've been talking about. If you're new to the channel, this is the type of thing that we're looking for through the July period. And pending this whole non-farm payrolls information works out for us, we're still thinking that it can slowly grind its way up here with, of course, the normal pullbacks across the line. And if it does get up there, we're going to have to pay a lot of attention to the bears, because this will be where the bears start to really try to control that market. Move over to SPX here, the S&P 500. Very strong movement here actually yesterday. You'll notice, considering most of the days it was a little bit better. Percentage-wise, it's not phenomenal or anything like that, but it is moving towards, again, at the community trend line. I kind of expect this trend line to be hit at the same time as the ascending channel gets hit on the QQQ. And if both of those happen at the same time, it just doesn't get better. You're starting to pinpoint key levels across the board. And that's what we're going to be looking at here for the S&P 500. Let's go down the 15 minutes, see if we have any clear ranges. I would say probably not, other than we've seen it come off this 50 exponential moving average on the 15 minute in its little aggressive trend up. So you can see 1, 2, 3, 4. If it comes back here, will there be buyers? Traditionally, there has been. So this is the type of zone just recently that has been purchased off from a moving average. And you've got to pay attention to them. And for day traders and scalpers, this is the type of area they are looking at. Let's have a quick look at IWM. This is the one I had on the front screen. And this is probably because it has the best looking channel on it, the best looking pattern currently. We have some bullish aggression coming back into this market. We've got a 234 resistance. This resistance here, this level of effectively buyers not being able to get through. The sellers are still controlling it. And notice we're at the critical point right before the jobs number. So if we breach, what does this mean? Possibly the back end of course, the Russell 2000, the smaller based cap companies, they're going to start firing. And we have a clear target, because as we know with the channel, A, which is the distance between the channel, becomes B, which is the extrapolated out profit area. Good luck, everyone. And just remember, if you're looking for the non-farm payrolls, it's 1 hour before the New York Open. Join us here on the channel. Make sure you subscribe. Hit that like button if you enjoyed the video. And we'll be covering next week, which is going to be a doozy, because, of course, when we have something like a non-farm payrolls come out, usually we get a decision made in the market, and that decision leads to some good gains. Bye for now.